So our view is still intact, where we do think that we're still in the early stages of a sustained bull market. With that, it is an emerging market, so there is some volatility, and I think that's something that we saw this year.
All right, welcome back inside our proactive newsroom. And joining me now is Steve Schofstall. He is the Director of ETF Product Management at Sprott. And Steve, it's good to see you. How are you?
Doing well, Steve. Thanks for having me.
Yeah, excited to have you along. Talking a little bit about uranium and nuclear energy and all the fun stuff. So let's talk a little bit about. I was going to say the future, but I think the future is kind of now when we talk about artificial intelligence and the nuclear sector.
Yeah, absolutely. So when we look at how AI fits into the broader landscape, we tend to think of it in terms of electricity and what's needed from an electricity standpoint. And before the AI story really started picking up in late 2023 and throughout 2024, a lot of projections had the expected electricity demand growth going from about 165% from 2022 out through 2050. As the AI story has really started to kind of accelerate and garner attention, we're starting to see a lot of these tech companies starting to dip in and starting to look at nuclear energy. And the reason for that is to run AI-specific data centers, it requires much more electricity than your typical data center, if you think like cloud computing or what you're using for a regular Google search. And because of that, there's a large need for reliable baseload power to power these algorithms and data centers and keep all the servers and everything cool within those data centers. And so what we're starting to see is tech companies move into the nuclear energy space, trying to power these data centers with nuclear energy. We see that earlier this year, Amazon signed an agreement with Talon Energy so that they can have a data center right adjacent to a nuclear power plant so they can get power directly from nuclear energy. We also see at 3 Mile Island, also in Pennsylvania, where Microsoft is trying to get that reactor up and running with Constellation Energy, again, to fuel data centers. And we just saw just last week where Meta is actually looking to work with nuclear energy providers. And the reason they're turning to nuclear as opposed to wind and solar is, first, they do have a clean energy mandate and their own carbon goals that they have from a corporate standpoint. So because nuclear energy is so clean, it allows them to meet that aspect of it. And the second is the reliable baseload power that nuclear energy provides. It's much more reliable than what we would see in things like wind and solar. So that's been a very attractive prospect for a lot of these tech companies.
Okay. Steve, I want to turn our attention to the uranium market and really what we're expecting moving forward, because obviously you have a incoming president with President-elect Donald Trump. I imagine that there's going to be people looking around going, what's going to happen next year in the US and then beyond? What about the uranium market? What are you seeing?
Yeah, and I would say if we were to look at past Democratic administrations, most would say that President Biden has been very pro-nuclear, and we've seen a lot of things like the infrastructure bill and the Inflation Reduction Act, the Advance Act, all of these different legislation that was passed in support of in part in support of nuclear energy. What we would expect from a second Trump administration is that continued support. So traditionally, Republicans have very much been in favor of nuclear energy, but most recently, I'd say Democrats have really kind of stepped up their game there. The reason for doing so is different amongst the two parties. If you look at Democrats, they're doing it largely for clean energy purposes. When you look at the Republican reason for continuing along nuclear energy, it tends to go along the lines of energy independence, national security, economic growth, things of that nature. So what we expect to see from President Trump as he takes office here next month is there will be, we expect to see continued support for not only the mining industry, but nuclear energy in general. One of the comments that he made just a week or two ago was that he would look to fast track any permitting process if someone's investing at least $1 billion into a project. And when you start to think of mining and nuclear energy, that tends to cover, the vast majority of projects that would look to be stood up. There's also some news within the last day or so where there's potentially discussions around any projects that are being funded by the federal government, or whether it be through loans or grants, that potentially they could get some potentially favored, processing and to move things along much quicker. So what we expect to see over the coming years, all through the next presidency, would be a continued effort on increasing our domestic energy production. We expect that to continue to be a priority and would expect support not only of things like oil and gas, but also of nuclear energy going forward.
Yeah. President-elect Trump, no doubt, and the rest of the government in the U.S. will obviously have a lot of things to deal with. There is a wild geopolitical environment going on around the world right now. So, talk to me a bit about the effects you see of that moving forward.
Sure. And if you go back, 10 or 20 years or so and take a look at China and as it was expanding and industrializing, what you'll notice is that they were spending a lot of time forging close economic ties with, certain cases in Latin America, but definitely throughout Asia and Africa, and really focusing on materials and minerals. And that's really spawned and kind of developed into the critical materials space as well. So that's no different than what we see now. So I'd say if we were focusing on Africa, Niger is a country that produces, they're the seventh largest producer of uranium in the world. They produce around 5% of uranium. Much of that goes to France. Since the coup has happened in Niger, we've seen increase in instability, and we've
Mhm.
also seen the leaders now involved there increasing their ties with Russia and China. French producer Orano, runs many of the uranium mines in the country, has stated that they've lost operational control in some cases. They have about 1,150 tons of uranium, which they haven't been able to export out of the country. So it seems that's one area where we're seeing uranium being directed to Russia and in China. If you look at Kazakhstan, and in particular Kazatomprom, which is the state entity that operates within the country, they produce about 45% of the global uranium. We're starting to see increasing ties with China and Russia. We see they just recently signed an agreement with China in which they're going to send more uranium to that country, and then also along the Kazakh-Chinese border, they're building up a massive trading hub and a storage facility. So again, that's the largest provider of uranium is starting to gravitate to China and Russia, which isn't helping with those energy security concerns. If we look at how uranium purchases have gone, China is stockpiling vastly more than what we're seeing from other countries.
Yeah.
So from our standpoint, what we think that tends to lead itself to is more domestic production in Western countries. So think Australia, United States, and Canada. We would expect to see incentives, and we do see that through some of the legislation to provide grants to get mines up and running or build out various aspects of our nuclear capabilities. And we would expect that to continue going forward.
Yeah. Let's talk about 2025. Give me a bit of an outlook. I know you cover uranium quite extensively with the two ETFs that you have. So tell me a bit about what 2025 looks like as far as an outlook.
Yeah, so if we were to just take quick stock of where we're at now, 2024 saw, I'd say what we would expect, or what we would say would be a period of softness. And when we look at the uranium and how we expect it to perform into the future, we do expect more of a staircase type performance metric. So we'll see periods of rising uranium prices, and then periods where it calms down a little bit. We see some consolidation, and then would expect later periods of more upward movement. So our view is still intact, where we do think that we're still in the early stages of a sustained bull market. With that, it is an emerging market, so there is some volatility, and I think that's something that we saw this year. If you were to look at the prices of uranium miners going out through the end of November of this year, they were largely flat on the year, though they've sold off here a little bit in December on a kind of a slow news cycle, and as traders are repositioning their books at the end of the year. We expect as we get into the next year and traders start to come back into the office and investors come back, we expect to see continued interest and more wind in the sails, so to say, in that upward movement. If you look at where we're at from a pricing standpoint, there's two ways to look at if you're looking at the commodity itself. So you have the spot market, and then you have the contractual market, which is where a lot of those utilities are actually buying the uranium for 2, 3, 4, 5 years out into the future. What we're seeing is that contracting market is actually trading around 16-year highs. So we're seeing prices on the upside around $130 per pound. We're also seeing a floor on those contracts, somewhere in the $70 to $75 range. So that would impute a midpoint of about $100 or so in the price of physical uranium. So we do still see that demand is working its way through the contracting market. We're also seeing, as I mentioned, that China entered into a large contract with Kazakhstan. We think that increases the likelihood of future contracting amongst Western utilities. And just recently here, coming for more wind at the back going into 2025. Here in November we just had the COP29 conference where we had 6 more countries sign on to a pledge to triple nuclear energy capacity. That now gets us up to 31 countries that have signed either at the COP28 conference or up to and including this COP29 conference. So I think that, coupled with what we're seeing from a geopolitical perspective and government's willingness and necessity to invest domestically and provide grants and resources to companies to expand out domestic supply, I think that bodes well as we continue to move through this bull phase.
Yeah, it'd be very interesting to see for sure. Steve, thanks so much. Great to see you and get an update on where things are at and where you're suggesting they may head in 2025. Appreciate your time. Thank you.
Thanks for having me.
All right, there's Steve Schofstall. He is the Director of ETF Product Management at Sprott.